We have another IPO in town, and this time it's a cement company. It's called Nuvoco Vistas. Now, the issue, as I said, opens from 9th August to 11th August, and the IPO size is 5,000 crores. So it's a decently sized IPO. The price band is 560 to 570. And without any further delay, let's begin the review. The promoter of this company is a product you've used and seen ads while you were a child. That's the Nirma Group, and the promoter is Dr. Karsan Bhai Patel, which means this company actually belongs to the well-diversified conglomerate of Nirma. So basically, Nuvoco Vistas is their cement division. So now let's talk about the company itself and how the business model actually functions. So the company is actually the largest cement manufacturer in East India, comprising about 17% of the market share. But if you look at Nuvoco Vistas on an India basis, Nuvoco Vistas is the 5th largest Indian cement manufacturer in the country. I mean, to put this into perspective, Nuvoco Vistas is larger than Ramco Cements, than Birla Corp, even greater than India Cements. So they have 8 cement plants in East India where they have a great foothold, and about 3 cement plants in North India. So let's talk about their business model. So the business is divided into the trade segment and the non-trade segment. It's a fancy way of saying B2C. So this is where Nuvoco supplies this to actual end consumers. And then you have the B2B segment where they supply it directly to businesses in a large wholesale type of fashion. So now the trade segment, which is B2C, this is individual home buyers. This is about 73% of sales, right? Which is actually really high. And obviously the non-trade segment, which is mostly directly sold to institutions, is about 27%, right? So most of the company's focus is on the trade segment, and there are 2 reasons for this. One, they have distribution in place, and second, it's actually higher margin. And ultimately, the products are basically 3. You first have cement, then you have something called RMX. I'll explain what it is. And then the third over here is you have modern building material. So their cement portfolio mainly comprises of 2 brands that they have. It's called Concreto and Duragard. And then we have ready mixed concrete, which is actually a new segment in India. So when cement is used on site, it's usually built or mixed on the site. Now this can lead to quality issues. It can also lead to other issues which will hit later on. But this product is actually built by Nuvoco, supplied on site, and all they have to do is use it. Now the quality is pre-checked. There will be no errors. It's also high precision. So in that way, this is probably a better way to control quality for the end user. And then we have modern building material. These are all the other small chutka things that are used to build an apartment. It could be wall putty, dry plaster, cover blocks, and even ready mixed dry concrete. So these are in the other category. And remember that these products are sold to both categories, the trade segment as well as the non-trade segment. Nuvoco is actually positioned very close to their limestone reserves and other places where they source their raw material. So that's an advantage. And they're also positioned close to highways, roads, and rail connectivity. So they can do this part of the logistical, which is doing the distribution. So this is obviously gives them some competitive advantage. The next point I'm going to talk about is the industry overview. So we've talked about Nuvoco's business, but let's talk about the cement industry now. It's not that great, to be honest. If you look at the industry at a global level, it's been completely muted, which is a fancy way of saying koi growth nahi ho raha hai. From 2014 to 2020, even the estimates for 2021 and 22 aren't that great. And we've seen a lot of companies which have great growth in industry. Cement isn't one of them. But maybe that's true for global. What about India? If you look at India, let's talk about consumption. The average consumption per capita is 200 to 250 kgs. This is like half of the global average of 500 kgs. This is also a negative sign. It means that people in India right now are not even close to what the consumption is on a global level. Perhaps one positive thing in this entire story is that the government always pushes towards construction and infrastructure, especially a place like India, where construction and infrastructure is tied to future growth. So maybe that is one good thing, but overall the industry just seems a little bleak. So guys, the objects of the issue is really weird. I'll give you a personal opinion on this. So we can see that the issue size is 5,000 crores. Out of that, 1,500 is a fresh issue, which is being raised via the IPO. The other amount is actually going straight to the promoters, to the investors, etc. That's fine. But the 1,500 that is being raised out of the 5,000, which is the fresh issue, out of that 1,500, 1,350 crores is being used to repay borrowings. So the question here is, why are they raising this money? Are they going to use this to grow the company? That doesn't seem very clear. It looks like it's being mostly used to repay borrowings versus work on new products, expanding markets, etc., which could give Nuvoco Vistas some growth. So that's something we couldn't find here. If you found some way that they could grow exponentially, put it in the comments below and we can learn from each other. So let's talk about the financials now. Now, generally speaking, when you look at the financials, you want two things. You want to make sure, actually you want a few things. You first want to make sure that the borrowings is limited. You want to make sure that the sales and PAT is growing consistently over a period of time. So there is some predictability to it. And you want to make sure that the industry they are in is also growing exponentially. So we've talked about the industry. Let's look at the financials. So here we can see that the revenue increased from 2018 to 19, but it declined from 2019 to 20. And this pattern has actually emerged a lot in the financials. It's really volatile, which is not good from an investing perspective. We can see that the company earned a profit in 2018, but 2019 were losses. Again, there was a profit in 2020, and then loss for 9 months ended in 2020, December again. So there is a lot of volatility happening here. You're not even close to getting a consistent growth or consistency in revenue numbers. You'll also see that the profit after tax margins are not really attractive. It's 3.5% to 1%. मतलब अगर sale भी हुआ तो return तो बहुत कम है. Another thing you guys know by now is we look at the ROE and ROC very carefully. Anything above 25-30% is considered really good. It's a way of finding out whether the money that they have is being used to grow the company or not. And over here, the ROE is 4.72%, and the highest ROCE is 7.66%. 7.66%. No comments. But there is one good thing. Although the debt suddenly increased, after the IPO, they will pay back some borrowings, so the debt to equity ratio will actually improve a little bit. I guess that's a good thing. Top industry players are Ultratech, Shree Cement, Ambuja Cement, and ACC. And the total income compared to all its peers, like Nuvoco, is the lowest amongst all of them. The EPS is also the lowest amongst the peers. And the return on net worth, I'm going to say, is the lowest amongst all the peers. The only positive factor is perhaps that the NAV, or the net asset value per share, is the second highest amongst all the other peers. So let's talk about the risks of this company. The first one is that it's a high fixed cost running business, which means if demand doesn't happen, the fixed costs still have to be paid. You can't stop that. So if COVID continues to slow down the industry, this is just not good news for Nuvoco Vistas or any player in the cement industry. There are also 1,008 legal cases against this company, which is obviously not a good thing. That could be that at some point, if they lose a case and they have to pay out something that they were not expecting to, then that could be a risk factor. There is also a high dependency on the trade segment, which is B2C, and that's pretty dynamic. We have already seen the profit and loss can be very volatile due to the volatility of the trade segment itself. Another feature of the trade segment is that it has a lot of competition. Other players can just offer cement at lower prices and people will switch. So there is no problem or effort with switching costs of customers. So here is a 4-point summary of the entire IPO. 1, the management is definitely strong. They've been running companies for decades on end. However, the industry itself doesn't seem to be dynamic or any possibilities of growing in the future. The financials of Nuvoco Vistas itself aren't that great. And although the company's operations are quite big, they're not really a market leader in their own segment. So if you found this interesting, there's a lot more to investing than just looking at one industry and the financials. You need to understand the basics of market, you need to understand how fundamental analysis works, and you should also learn how to create a portfolio so you can create long-term wealth. And we have a lot of courses on LearnApp. Click on any one of them. The first lesson is always free. Do check that out. We're really trying to grow our YouTube channel, and if you found this useful, check out these videos we've already made. Don't forget to subscribe and hit that bell icon. And if you really did like this video, can you put it in the comments? We read every single comment and it'll really brighten up our day. See you in the next video.